Welcome to Invest and Prosper, your number one tool to help you achieve your journey towards financial freedom.
Welcome back to Invest and Prosper. In today's video, we're diving into the heart of investing, the stock market itself. We'll cover what the stock market is, why it exists, how it functions, and why understanding it is crucial if you want to grow your wealth. Whether you're looking to invest for retirement, build wealth, or just understand how things work, this guide will be your starting point. So, what exactly is the stock market? At its core, the stock market is a network of exchanges where investors buy and sell shares of companies. Think of it as a marketplace where investors can become part owners of companies by purchasing stocks. When you buy a stock, you're purchasing a tiny piece of that company. As the company grows and succeeds, your stock's value may go up. But if the company struggles, the stock can lose value. The stock market is where these trades happen. The stock market exists for two main reasons. First, it gives companies a way to raise money to grow their business. Second, it provides investors, like you and me, with opportunities to make money by buying into successful companies. When a company needs funds to expand, it can go public by offering shares of its business. This process, called an initial public offering, or IPO, allows the public to buy into the company. In turn, the funds raised can help the business grow, develop new products, or hire more people. Now, how does the stock market actually work? The stock market operates on the principles of supply and demand. Buyers and sellers make offers on stocks, and their willingness to buy or sell determines the price. For example, let's say you want to buy a stock for $100, but there aren't any sellers at that price. You might need to offer a bit more, maybe $101 or $102, until a seller accepts. Likewise, if there are more sellers than buyers, prices may go down. This buying and selling often happen on exchanges like the New York Stock Exchange, NYSE, or NASDAQ. These exchanges facilitate trades and make the process safe and efficient. There are a few key players in the stock market that you should know about. First, there are retail investors. That's us, individual investors who buy stocks for personal investment. Then there are institutional investors, like banks, mutual funds, and hedge funds, who invest large sums of money and can have a big impact on stock prices. We also have brokers who facilitate trades for investors. Brokers can be online platforms or financial advisors. Lastly, there are market makers who provide liquidity by always being willing to buy and sell stocks, ensuring that trades can happen smoothly. You might have heard of terms like the S&P 500, NASDAQ, or Dow Jones. These are stock market indices that track the performance of a group of stocks. For example, the S&P 500 includes 500 of the largest U.S. companies and serves as a snapshot of the market's health. The NASDAQ index tracks mainly tech companies, and the Dow Jones Industrial Average includes 30 major U.S. companies. Indices give us a sense of how the market is doing overall, even though they represent only a portion of all stocks. When people say the market is up, they're often referring to one of these indices. The stock market goes through cycles. When the market is going up, we call it a bull market. Bull markets are often fueled by investor optimism, strong economic growth, and low unemployment. On the flip side, when the market is declining, it's known as a bear market. Bear markets can be driven by fear, economic downturns, or other negative factors. Understanding these cycles can help you keep perspective during market ups and downs. Stock prices don't stay the same. They're constantly moving due to various factors like company earnings, economic news, and global events. When investors think a company will perform well, demand for its stock rises, and the price goes up. If there's negative news or a weaker outlook, the price may fall. Emotions like fear and greed play a big role in these fluctuations. That's why it's essential to have a long-term strategy, and not be swayed by short-term market noise. Now you know how the stock market works. Understanding these basics is key to building confidence as an investor. If you found this helpful, give it a thumbs up, subscribe to Invest and Prosper, and let me know in the comments what topics you'd like to see next. Stay tuned for more videos to help you take control of your financial future. Happy investing!